11:35 on a big show clock. Being brought to you right now by the Iowa Agriculture Water Alliance. Clean water in Iowa starts here. You bet it does. Doesn't matter where you're at. Clean water in Iowa starts with you. It's all of our responsibilities. I think two wonderful, many of the projects we talk about here with the Clean Water Wednesday presentations. Brought to you by the Iowa Ag Water Alliance.
Right away.
We need to get on the telephone line, talk a little markets here. Brian Hoops is with us, Midwest Market Solutions. And, Brian, the Outlook Conference grinding on in Washington. Anything come up today that might be hitting the market? And if not, we're going to talk about the acreage numbers. What are you seeing?
Yeah, not much news coming out today. In fact, after those acreage numbers were released yesterday morning, very early, 6 o'clock Central Time, there really hasn't been any other information even talked about. That's what's been focused on so far. And, the USDA did say 94 million acres would be planted, which is significantly more than this year. But if you remember back to just 2 marketing years ago, just 2 seasons ago, we planted 94.6 million acres. And with the economics of scale today, when you factor in cotton acres that are going to be down quite a bit and move to corn this year, I think there's very high odds we're going to come in way more than the 94.6 million. I just can't see us planting less than what we did 2 years ago, more acres, I think. And we're just going to have to be prepared for probably a 95 million acre number when those planting intentions get released at the end of March.
Now, is that going to, you mentioned cotton, I understand that. Is that going to come with the sacrifice of soybean acres then too?
To an extent, yes. Soybeans will be sacrificed, and that's mainly due because of the economics. You look at the corn and soybean prices that farmers could sell at today, and you use the yields. It tends to do more corn than soybeans. And in fact, we're setting our final day for setting insurance prices for this fall, and we're going to be probably $1 a bushel less than a year ago for soybeans, and quite a bit lower for corn as well. So when you look at all these factors, insurance guarantees, possibility of profitability, it's going to be really hard, I think, for 94 million acres to be seeded. I think you're looking at 95 and maybe more acres when it's all said and done.
Now, you mentioned that this is the last day to establish prices. Do you have those off the top of your head? I don't have them here, Brian.
Yeah, I don't have them either. They're still being calculated here. So we're last year I think we were like in the 560 range or something for corn, and so we're quite a bit lower than that right now. But it's the soybeans that we're really down from a year ago as far as those crop insurance numbers. But we'll have them after today.
Yeah, and like you say, it's going to be today doesn't make a big difference. I mean, unless you're going to triple the price of soybeans all of a sudden. It's pretty much where we thought it would be. And I think USDA had a cash price for soybeans at $10 even? Yeah,
they sure did. And so, that's probably going to be tough when you look at the futures right now at 10.33. Getting the 30-cent basis on soybeans might be difficult to have that as an average, but it's going to get down to it's not what you plant, it's what you grow during the season. It's really going to get down to our growing season, and are we going to have any type of a drought or weather scare? When you have 95 million acres of corn planted, you can have a little bit of adversity and still have a little bit of cushion. Well, yeah, and it's the prevent plant acres that you always wonder about and where those acres might be. Now, as far as marketing, then, you're thinking we're going to see bigger corn acres, and that probably is going to put pressure on the market going forward. So what are you thinking about doing some marketing right now? Yeah, I think guys really need to be focused on doing that. Through most of the last 2 to 3 months, we've enjoyed uptrending markets for corn and soybeans and to a lesser extent wheat. So the fun mentality during that time frame was buy breaks, and you were rewarded because the market rallied and made new highs. Well, things have changed. If you look at technical chart analysis, the trend indicators I use, we're now starting all downtrending markets. Wheat and corn this week have turned into downtrending markets. Soybeans have turned into a downtrending market. That means the fund traders are going to be looking at rallies as selling opportunities rather than buying opportunities. So yes, rallies are going to be sold, And that includes, producers. If you haven't done much marketing, December corn at 456, November beans at 1033. We've seen better prices than that, but we are likely to see lower prices than that by the time harvest rolls around.
Moving into cattle a little bit here. I can't remember the last time we talked what the cattle market was, but we were above $2, and now we're probably going to cash below $2 across the upper Midwest this week. What are you thinking about with live cattle?
Yeah, the cash markets are softer. Again, what we've seen traded so far this week, we've had northern trade 198 live and 313 dress, so $2 lower on a dress basis. That trade is, we haven't seen anything in the southern plains develop yet, but it's going to be a disappointment, I'm afraid. We're going to probably continue to work lower here in the futures because we're in a downtrend market. In fact, almost all these markets that we trade are trending lower. Crude oil and stock market and livestock markets all trending lower along with the grains. So it may be a tough go here for quite some time until we get these trends to change. Now, supplies are tight in the cattle, and that hasn't changed. But it is, from a demand standpoint, that certainly has changed. That has softened up quite a bit. When we were over that $2 mark, consumers really seemed to back away, and some of those higher retail price levels are still on the grocery shelves. And until we work through some of this supply, get those prices down, we're going to probably struggle from a consumer standpoint, and that's going to leave that cattle market as selling opportunities again until we can turn the trend back to the upside. We're not doing anything like that today. The cutouts at midday were mixed. And until we see box beef values start to move higher for several days, not just 1 or 2 days, we need to see a trend change there to get the demand equations back on the positive side.
Brian Hoops with us, Midwest Market Solutions. Brian, we'll check in with you again in an hour and 10 minutes and get some targets moving forward. And until then, in the meantime, I should say, how can we find out more about Midwest Market Solutions?
Yeah, you can go to our website, which is MidwestMarketSolutions.com, find a list of all of our offices there, sign up for our daily newsletters. Otherwise, you just give me a call at 417-501-5132.
Brian Hoops, thank you. We'll check in with you again in a little bit.
Food, fuel, and fun. We speak farm. This is The Big Show.
12:55 here on The Big Show clock. Just got a message from old buddy Jacob Hansacker. And he's our tile guy. We talked to a lot about that with hands-on excavating and tile folks there north of north central Iowa. And Jacob, north of Hubbard, and Jacob says 22 inches of frost is the frost line. 22 inches, Nathan, is where the frost line is right now. So we got a lot of warming up to do. Well, we were well below zero there for quite some time with no snow cover. So good to hear from him. Yeah, let's hear from Brian Hoops right now. Brian with Midwest Market Solutions. And Brian, the market hasn't moved much. Unfortunately, it's stuck about 9-10 cents lower. What's going on corn and soybeans today?
Yeah, unfortunately, that market are lower on the day, sharply lower cattle since we've been talking, it seems like. But, we've seen some ongoing fund liquidation during the session here. The funds have built up a massive net long position in corn, covered their shorts in wheat and in soybeans, and went actually net long. And now the trend has changed back to the downside, so they're starting to peel out of those long positions. And we saw this in cattle a few weeks ago, maybe a month ago actually, where the trend was broken as we were trading up over $200. It was a real bull market. And when that trend started to change, attitudes changed, and the funds, instead of being buyers on dips, they were sellers and continue to sell. And we're seeing that even a month later. It continues to take place where the funds, any type of little rally, are selling out of their long positions. I'm afraid that we may see that happen in the corn, soybeans, wheat markets, especially the corn, though, where they have big, long positions there. That's the real concern, unless we get some fundamentals, some news, something to push us back higher. But we were talking in the first segment about those acres coming in, maybe 94.5, 95 million. That's going to be an issue.
Well, with that hanging over the market, what are you thinking about for targets here in the next couple of weeks, December corn, November beans?
Yeah, we sure like to see some sort of a rally when we go back into the March supply and demand report. If we can get something reversing where we're at, assuming we kind of find some support here, 456 in corn, we get back in that 475 range, 470 even. I think those are some really nice selling opportunities. And for soybeans, they're trading 1031 right now. Anything 1050 to 1075, I think, is going to be looked at as real good selling opportunities come this time next fall.
Let's look at cattle here for a second, Brian, and then the reason I am is because we're $3 lower here, April and June futures. And with the last cattle on feed report, we're not seeing a build-up back into the feedlot by any means yet. What seems to be pressure in this cattle market? I figured we'd see some strength heading into barbecuing season.
Yeah, we're getting close to that barbecue season. Can't really come soon enough for most people. The biggest problem is the fund liquidation. That they've built a massive net long position in the cattle. They're liquidating those positions, kind of ignoring the tight supplies of the cattle market, and really more focused on consumer demand backing away, especially at the retail level where prices are extremely high. So what we're seeing is more technical selling, more technical liquidation than anything.
How can we find out more about Midwest Market Solutions?
Yeah, check us out online, MidwestMarketSolutions.com. Sign up for daily newsletters, YouTube video series, that sort of thing. And thanks for having me on, Bob. Have a great weekend.